Welcome investors to the 40 Finance channel. My name's Jeff Beers. Got a great response yesterday to my tech stocks under fair value video. So coming back here with energy and utility stocks this time. And the goal here is really to just look across Morningstar, find some of the energy and utility stocks that they have listed under fair value. As I mentioned in the last video, Morningstar is a pretty conservative firm. So if you can find some of their names under fair value and then go cross-reference them with other metrics, sometimes you can dig on some great opportunities, and that's exactly what we're looking for today. Reminder as always that my stock picks and projections, they're just my opinion for your entertainment. Please make sure you do your own research before investing. That being said, if you like stock market analysis like this and other personal finance videos, please give this video a like, subscribe to the channel. Thank you to everybody for your support. All right, so we're going to jump right in with 3 names from the energy side and 3 names from the utility side. I'm going to go through these very quickly. Just full disclosure, I do not typically invest in energy or utility stocks as a standalone play. So for this, we're going to use other people's metrics to kind of measure where the opportunity might be. Okay, first stock here is a utility, Edison International, ticker symbol EIX. This is a 4-star stock according to Morningstar. And if we look at their fair value, they have a price of $70 on Edison International. You are trading today at $58.56. The last close here was $58.68. As far as projections go, the year ago EPS was $4.52. Consensus for this year is $4.53. Looking ahead to next year, $4.72. And on the revenue side, projection for 4.6% increase this year, followed by 3.2% next year. All right, taking a look at TipRanks to see what the best performing analysts think of EIX. And we're not going to get as many updates in these utility and energy sectors as we see in like tech and consumer, but we do have a couple that are fresh within the last month or so. You've got 2 buys and 1 hold. Both of those prices, though, are up from today. So plus 23%, plus 30% here. So there does seem to be a consensus that EIX has some money to be made in it. One last note I should have called out for EIX. You do get a dividend with most of these utility and energy stocks. In this case, on today's price, it's 4.52%. So this is definitely a big part of investing in these 2 sectors. All right, next on the board in utilities is FirstEnergy Corporation, ticker symbol FE. Get 4 stars again out of Morningstar for this one. Fair value of $42. Last close was $38.79. Stock is a little bit up today at $38.89, so very close to the 8% discount listed here. All right, you see the 1-year chart over here. I just want to call out the dividend on this screen since I forgot it last time. $1.56, which is 4% on today's price. All right, analyst projections, year ago EPS $2.39. Average estimate right now at $2.51 for this year. Next year at $2.60. And on the revenue side, we got a projection of 6.3% growth this year and 2.3% growth next year. All right, over in TipRanks, it's been a while since analysts have come in on FirstEnergy. Last update was 28 days ago. It did get a buy at $45, which is 15% up from today. The rest look like they came out 2 months ago. Maybe there was an earnings release or a press update. It's important to note you do have a sell and a hold. So I would say the consensus is very close to this $42, $43 with a couple analysts kind of bailing or holding steady on the stock. All right, next stock on the board is one I just kind of threw in for fun with renewables getting so much press. That is NextEra Energy that specializes in renewables, ticker symbol NEE. This is only a 3-star stock compared to the other 2 we looked at that came in at 4. And here you see, despite being in renewables, which is a relatively inflated market right now, You've got a fair value of 75. Stock price right now is 73.44, so that's right within range of the last close. So you're basically calling this one fair value at its current price. All right, quick look at the one-year chart here, focusing on the dividends, which come in at $1.54 or 2.10% of today's price. As far as projections, last year's EPS, 231. Expecting to jump to 252 and then 273 for 2022. Scrolling down to revenue, we've got a projection of almost 11% growth this year, which is definitely the highest we've seen on this video so far. And next year getting pretty close to double digits as well. All right, looking at TipRanks, similar story in the sense that we haven't had a lot of updates. Most coming 2 months ago and above, but you do have mostly buys. One hold is the most recent call at $75. You have others that are coming in, let's just call it an average of about 90. And I think for me, what's interesting about NextEra is just their focus on renewables. They do have a utility company as well. But I could see this stock having more action technically than some of the others only because renewables are such a hot topic in today's market. All right, switching over to energy stocks. And the first one on the board is Royal Dutch Shell. Note that I'm using the Class A shares here. That's only because they seem to have better coverage. But to be fair, I'm not 100% sure what the difference is between Class A and Class B. Normally, it's just a voting rights thing, but just know that we are looking at RDS-A today if you start to do your own research. Scrolling down here, you've got a fair value of $58. Today, the stock is trading at $42.19, so just down a little bit from the last close, and Morningstar does give this a 5-star rating. All right, you see the peak at the one-year chart. As far as dividends go, we got $1.39 per share, which is equivalent to 3.36% of today's price. All right, on the analysis side, year ago EPS was only $1.24. I'm sure that's majorly impacted by the pandemic and oil prices. $3.81 for this year. Next year, we're looking at $4.70, so very impressive EPS growth. And then the revenue growth is just as surprising, 44.3% this year and another 21% next year. So I'd have to dig in a little bit more, but I'm guessing that revenue obviously was severely impacted by COVID, and you have a substantial return to normal, if you will, here, and then additional growth or additional room to get back to par in 2022. So this definitely looks like a potential value play. All right, on the TipRanks side, I'm going to switch over to all analysts here instead of just the top-rated analysts because there wasn't a lot of coverage with this one. You can see these guys all have 4, 3 stars. I guess maybe this guy would have been cut out. Potentially him too, for not having a 4 or 5 star rating. But what we've got is still limited coverage. So 7 days ago, 3 months ago, 4 months ago, it looks like, you have price targets. First of all, the first two didn't even provide a price target, and you've got a position of hold, buy, and then down on the older ones, hold and 2 buys with price targets, anywhere in the upper 40s into the 50s. It's very interesting that they don't have many ratings for this stock because at least on the fundamental side and the projected growth side, I definitely see some opportunity here. All right, next up is Schlumberger Limited, ticker symbol SLB. This is another 4-star stock with a fair value right now of $47. The last close was $34.05. I'm seeing $34.16 in my off-screen ticker. So that's a 28% discount, which is definitely intriguing. Let's take a look at the other metrics. As far as dividends go, you got a 50-cent dividend per share at 1.43% of today's price. All right, on the analysis side, year ago EPS of 68 cents, looking at $1.12 this year if everything goes right, and $1.61 in 2022. All right, looking at the revenue estimates, interesting here, you're seeing a minus 4.4% is the consensus estimate. Looking ahead to next year, though, that could go up to 12%. So kind of a mixed bag here in 2021. You definitely have to do your research to figure out, what might be going on here that they would actually have negative sales growth. All right, on the TipRanks side, we've got enough analysts to give us some idea. Some of the ratings are old, though. You have last month, and then it gets even older from there. If we start here, we still have 4 buys, but it's interesting that 2 of the prices are actually downsides from here, coming in at 33 and 32. Now, you do have some price targets of 38 and 35 that offer limited upside from this point. So definitely dig into Schlumberger. You may want to find out, is this one that you're going to have to wait through 2022's fiscal year to really start to make money? In the short term, I guess you would have the dividend. All right, last but not least, we have Exxon, ticker symbol XOM. This is a 4-star stock. And when we look at the fair value, they've got $74 on this one. Exxon's currently trading at $63.74, which is up just a little bit over this last close. All right, you see the 1-year chart. Let's take a look at the dividend. $3.48, which is equivalent to 5.6% on today's price. I believe that's the highest we've seen on this video so far, so very intriguing there. All right, taking a look at projections. Tough year last year, minus 33 cents on the EPS. Looking at $3.69 this year, $4.42 next year. If we scroll down to revenue, 46% jump in revenue this year, likely sort of getting back to par, if you will, because next year looks like very minimal growth for Exxon next year. All right, on the TipRanks side of things, we actually have a few updates here, which is nice to see. Yesterday, 4 days ago, 2 weeks ago, and last month, you've got buys across the board, upsides trending anywhere from 5% a month ago to 41% today from Merrill Lynch. So it looks like there's been a boost in the bull case for Exxon here recently. So definitely one to add to your list to research more. I don't know how much I like that 2022 revenue forecast of being under a single digit, but you may find in your research that that consensus estimate has already gone up from where we saw it posted on Yahoo. All right, guys, so there you have it. 3 utilities, 3 traditional energy stocks. Of that batch, I liked NextEra Energy's concept of pushing towards renewables. Looks like there might be some value there. It's not wildly under its fair value. But on the energy side, I'll personally be taking a look into Exxon and Royal Dutch Shell a little bit more closely to see if I can find enough growth in the future for those companies to constitute potentially buying under fair value today. All right, investors, I hope you enjoyed this video. Let me know if you have any ideas for the future. As always, please give the video a like, subscribe to the channel. We'll see you on the next video.